Right, so today is the day that I will be selling my Vanguard S&P 500 ETF. But don't worry, I'm not leaving ETF investing. Instead, I'm moving all those funds that I invested into the Vanguard S&P 500 and shift it into my new favorite ETF, which is also based on the S&P 500 ETF. And I made a video about it 3 months ago in which I shared that State Street ETF, they lowered the ETF expense ratio from 0.09, which is still pretty low, now to only 0.03%, which is definitely the cheapest S&P 500 ETF on the European market and less than half the expense of my current Vanguard ETF at 0.07%. So really quite attractive. But at the time when I actually first talked about it, it was still fairly recent. As you can see, it was only since November of last year that they made those changes. So quite a few people commented in the video saying, well, Kai, you don't know if this is sustainable, or other ETF providers such as Vanguard will also follow, and in the end, it's not really worth to leave it. But I'm actually going to show you how powerful this move has been for that ETF and why I will be selling out of my Vanguard and shifting my funds into that particular ETF, and actually show you in that video how I do that through interactive brokers. That's the ETF I'm going to be buying, the SPDR S&P 500 UCITS ETF, which is distributing, so basically pays me out the dividends on the quarterly basis, and I buy it in US dollars. Now you can also buy it in euros. As you can see over here, great website for ETFs called justetf.com. You can just go on stock exchanges over here and see where it is listed. For example, over here, GetX, Stuttgart, Italy, all in euros. So you can buy the same ticker, but in different currencies. I just prefer buying it in dollars because mostly now I'm being paid in dollars, so it makes sense for me. Plus, I think long-term dollar is probably a stronger currency than the euro, but that's just my own humble opinion. But as you see, you have different options. Even in Swiss francs, you can buy it, or in pounds in London as well. I buy it on the London Stock Exchange in US dollars, and the ticker symbol is called SPY5. Now, interestingly enough, when I compared on just the ETF the various S&P 500 holdings, you can see the different types, and they're obviously clustered by best in terms of total performance. That includes things like tracking error and of course also management expense ratio. So there are different rankings. Then you have the largest S&P by size. So obviously which of them has the biggest volume. That's important, right? Because you want to have an ETF that is successful, that a lot of people invest their money to have sustainability and assurance that they will be operating that particular ETF in the coming future as well. Cheapest we spoke about with 0.03. It is definitely the cheapest you can get. I mean, I haven't seen anything cheaper. Even in the US, the VOO, for example, is the cheapest. So there's nothing less than 0.03%, and that's physically replicating. So it's not something synthetic, but actually physical replication, which is good because that means they're actually buying those shares, which I always prefer. And then we came to largest. And that's when people said, well, Kai, yes, maybe it's cheap, but you can see the fund size wasn't exactly very big, right? Because, you can see at the top here, the iShares from BlackRock has 83 billion euros under management, right? Then you have Vanguard, which I had previously, I still have, the VUSA, but I'm about to sell. That's the second biggest with 38 billion. I mean, these are major ETF sizes, right? Then you have Invesco, iShares, Vanguard, and only then comes the SPDR, the State Street ETF. That's basically the ETF provider, State Street, and that's the ETF I just shown you at only around 11 billion. In that way, of course, a lot of people said, well, I'm not sure if that's really the best fund to invest in. However, I found something really interesting that will quite surprise you. Now, those numbers I thought are the final numbers. However, they only update every so often, right? They're not live numbers. So once in a while they update them. But when you actually go to the website, back to State Street, so basically any ETF provider will always have a separate fact sheet and description about the ETF on the website. Even Vanguard, BlackRock, all of them have it. So you can just read up on it and obviously understand, all the history, the holdings, ticker symbols. Here, once again, you have basically similar information that you find on just ETF, but obviously most updated, right? And what's really interesting when we come to overview over here and see the total fund assets in USD, so slightly more than euros, of course, but you can see the number is significantly higher, and it's the most updated one. You can see that was the value 1 day ago, and obviously already significantly higher. Here it's around 10 billion. In euros, it will be around 14.8 billion euros. So still quite a significant step up. And what I found even more interesting is the development of the fund size. Now they let you download the numbers. They don't look very pretty, but just want to illustrate one point. If I now go back, as I had shown you before at the beginning, that change only came in November 2023. So if I go back to any time before, you see the numbers here, very stable, since the beginning of 2023, around 5 billion. You can see 5 billion, 5 billion. It kind of stayed fairly flat, right? I mean, a big number, but really not anything significant. So I'll go up, and it stays around the 5 billion range. And then we come to November, and boom, immediately you can see how the fund started growing. Now it immediately went up, you can see over here, to 6 billion. Shortly after, in December, we're already at 7 billion. Then it went to 8 billion in January. and it continued to grow. Now we are at already 9 billion, February 10 billion, continues to grow 11 billion, 12 billion, 13, 14, 15, and now we are at 16 billion. For me, this was just absolutely incredible to see, and it just shows you how important the fees are, because I mentioned many times the importance of fees. Higher fees means less profitability for you as an investor, especially over many years. Those do add up. And yes, 0.07 is very little, but 0.03 is less than half of that. And that also compounds over time in your favor, right? So a lot of investors seem to see it the same way, and they're starting to move their funds from more expensive ETFs to those cheaper ETFs to save money and increase their profitability. I think that's really incredible to see, and I was really quite amazed that their value more than tripled within a couple of months just by lowering the fees. So honestly, if that continues, I really think eventually some of those other ETF providers, they need to adjust some of their fees, but at the same time, I'm not sure they will, because they just household names. Everybody knows BlackRock, everybody knows Vanguard, right? These are the two big powerhouses, so they might just continue doing the same, but that's why I think it's really attractive, and I want to benefit from those lower fees. And that's why I'm going to be shifting away from Vanguard into State Street. Now, in case you're not sure about State Street, you haven't really heard about them, and you think to yourself, is that really a solid company? Well, let's look at the largest ETFs in the world, basically. And well, guess what? The biggest ETF in the world right now is the SPDR S&P 500 ETF from, well, you guessed it, State Street. That's the SPY, that's the biggest S&P 500 ETF in the world, based in the US. So that's even bigger than Vanguard and BlackRock. You can see here, that's $546 billion under management. I mean, it's absolutely unbelievable. You see over here, the issuer is State Street, SPDR, but as Europeans or non-US citizens, we can't buy that directly. But even that, you can see, has an expense ratio of 0.09%. So actually now, we as Europeans have a cheaper way investing into that ETF than the Americans have. So it's actually a win-win scenario and definitely the way to go. And in case you're saying, well, Kai, why you keep on buying the S&P 500? Aren't we already at the peak? And yes, prices have gone up in recent times. But guess what? The S&P 500 for the 37th time in this year alone reached a new high. And honestly, I think it will keep on reaching new highs because it is the dominant market index in the world. I really believe in it long term. And if you think all of those 500 companies, especially the top 10 over here, the 10 biggest, most powerful companies in the US, are gonna disappear overnight, then honestly, I think we have bigger problems to worry about than just our investment returns. And well, if I look at it from 2000, yes, we had some years where it went down, right? Not anything always goes up, but if you consistently invest long term, well, you see the trajectory. There's only one way, and that's up. So I wouldn't be surprised if we continue seeing new record highs. And that's honestly for me the easiest way to invest, because finding the individual winners long term, I think is really hard. So that's why I'm a big fan of investing into the S&P 500 amongst other investment classes, of course, but that's one of my favorite ETF investing style. Right, with this, let's hop over to Interactive Brokers, which is my broker of choice, where I have my biggest part of my portfolio sitting over there. I also use Trading 212. I'll show you in a second how I manage it over there. But here, all I have to do is go into my portfolio, and here see my holdings. Now, I used to have way more individual holdings in the past, dividend shares, even some individual, non-paying dividend shares. But yeah, I've really been cleaning it up in recent times and consolidating most of it into my S&P 500 ETF. And you see, I have now two, and it kind of defeats the purpose. Now, the first one I bought previously in the beginning was the VUSA from Vanguard at 0.07%. That's based in Amsterdam in euros, and I always enjoyed it, right? And honestly, you see the returns over here. It returned me so far almost 3,500 profit. So I'm really happy with this, and yeah, it's been a great investment, right? But I think it's time to consolidate everything into one, and that's going to be my SPY 5. So first of all, let's go ahead and sell the VUSA one. It will pull up all the details, and obviously from here you can see once again unrealized P&L. Obviously you could buy more or sell. In my case, I want to sell. You can click on this over here and you have the sell sheet, but I usually only recommend it if you want to sell a certain amount of it. But in my case, I'm going to close the order. So an even quicker way is just go out of this once again and then come back into your position, click the three dots over here and then click on close. So basically that will pull up exactly all the amount of shares that you have in your account, because otherwise you kind of have to exactly approximate. And I found a much easier way if you want to close a position. So it pulls up everything that I have, the quantity, and then of course from here you can change the order type, but I want to sell it actually right now, so in the moment. So I'm fine with the market order. Have a little preview over here. Yes, obviously you can see there is a bit of a commission. Now that the total amount is a bit larger, there will be slightly higher commission. So I'll show you in a second on Trading 212. Of course, you won't have any commissions, but at the same time, I just enjoy Interactive Brokers. It's such a solid, powerful broker. So I use both. Yes, it's a little bit painful to have the commission, but at the same time, for such a big position as a percentage, it's actually very little. I have the peace and comfort knowing that my money is really safe with Interactive Brokers. So if I'm fine with this, let's go ahead and click submit sell order, and boom, the order has been filled. So if I click done now, and then I go back into my portfolio, it should have been already removed from here. Yep, you can see now it's basically out of my holdings, and instead I have the cash holdings over here. As you can see, 16,200. Right, next I obviously want to go ahead and use those euros to buy more of my SPY S&P 500 ETF, but that's based in dollars. So I would need to convert my euros into dollars first. Now, Smart Money Club members know better because recently I made a post about it of what's the best way to go about exchanging money on Interactive Brokers. If you're converting a lower amount, it actually makes sense to use the automatic conversion. If you have a larger amount, over 6,000 euros around, then it makes sense to do it manually yourself first and then use those dollars to buy it. So we're gonna go ahead with this because actually it is a larger amount. So all you have to do is click into euros over here, and from there you can say I want to have, and then choose the currency you want to have, in my case US dollars, and then I just select the balance that I have in euros. So I want to convert all my euros to US dollars. That's what I'm going to be getting, 15,579. I click on preview over here. The only thing obviously to consider is the $2 USD, but once again, that still is better than doing it automatically through Interactive Brokers. And yeah, I just Googled it. That's pretty much the same rate I'll be getting online. So I'm really happy with this exchange rate. So basically, I'm going to be buying the same SPY worth 17,579. I want to remember that because I still have some other dollars sitting in my accounts, which I'm going to be using for my future weekly dollar cost averaging into that ETF. So let's go ahead, click submit over here, and boom. For some reason, there's still 13 euro cents left over here, but that's fine. The rest has now been converted to dollars, and I can use that money to buy more SPY5. Click into this over here. And then obviously I want to go ahead and click on buy. Now I could obviously go ahead and change it to dollar amount. It was 70,579, and that will give me around 31.2 shares. Now the only thing to consider, sometimes it is a bit more expensive if you buy a fractional share of certain ETFs. So in my case, I actually prefer buying a full share. So let's go ahead and change it back to shares, put 31 over here, and you will see 17,438. So around $100 less than I was planning to buy, but that's totally fine. Once again, over here, you could change the market type, time in force, all these things, but I just want to go ahead and buy it right now. So once again, click on preview. And yes, sadly, once again, I will have to pay some commission, at this time in dollars, because I buy it in dollars, obviously. So that commission in itself equates to around 0.05% of the total amount that I'm buying, right? Plus the one that I sold. So in total, I paid 0.1% commission. Now, honestly, in my eyes, it's actually still very fair. I know some brokers charging even 1% or 0.5%. Given the peace of mind that I have with Interactive Brokers, I'm really happy to go ahead and pay that. So go ahead, click on submit order, and boom, there we have it. Order has been filled. So yeah, if I go back into my portfolio over here, you will see now I have actually 77 shares of that, and my total market value is now at $43,000. And if I go back into my home over here, you see my total value hasn't changed because I just shifted the funds from one ETF to another. So in total, it's still the same value, but I just have everything now consolidated into one ETF. It just makes things easier with tracking. And as I said, long term, I believe actually it's probably slightly outperforming the VUSA one, especially as the fees are lower. So it means more returns for me. Now, of course, you could do the same, probably even faster and completely free of charge on Trading 212. If I open it up over here, you can see my portfolio value, and pretty much I have only one ETF in here, and that's, yes, you guessed it, the SPDR S&P 500 ETF, the SPY5, and it's the same. I buy it in US dollars in London, and that's what I'm tracking already nicely in the plus over here. Obviously, the value is a bit less than I have in Interactive Brokers. The majority I do keep in Interactive Brokers, but I do from time to time buy it over here because, of course, the big benefit is that I can buy it completely without any commissions. So if I would have done the same buy and sell right now, I wouldn't have paid any commission on that, which is really amazing. So imagine I wanted to buy $500 of that, click on review orders over here, and then you see commission is zero. So that's really the big benefit of using Trading 212. And if you want to check them out to get started buying your first ETFs or stocks, then use my link down in the description below and you'll get a free bonus share valued up to $100 to get you started. Well, there you have it. I hope it was insightful for you. For me, it was really surprising seeing what a little change in the percentage of the expense ratio of an ETF can make a difference in the total value of assets under management for that ETF. So it was really quite interesting. And we've seen the same scenario in Bitcoin ETFs, right? Some older first ETFs, they were more expensive and then came cheaper ones along and all the money was flowing into that. So really think about it. Now, obviously, I'm not saying everybody has to go ahead and sell the iShares or the Vanguard ETF to go into that. That's just my personal choice. But I do hope that other players look at that success and also adjust their fees down accordingly. And if you have any ETF that charges more than 0.07%, then honestly, you might really want to reconsider under at least the likes of iShares or Vanguard, or potentially the one I bought over here from State Street. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.